So hi guys, welcome back to today's video. So today's topic will be on 5 mistakes to avoid when trading on a small account. So what it means when a small account, meaning essentially you have a smaller capital and you're starting off small, which is the case for most young people. So the first mistake to avoid when trading on a small account is choosing the wrong broker. So it largely applies to people investing or trading stocks, lesser than on people trading forex. So fortunately enough in Malaysia, most of the brokers, or I would say rather all of the brokers and platforms in Malaysia charge a relatively low commission and brokerage fee as compared to overseas countries. It still does make a little bit of difference over time, because the more number of trades you take or the more investments you make, the amount you trade increases. Eventually it will still cause a little bit of difference if you choose brokerage that does not suit your needs. So similarly, if you're investing in an overseas stock like a US stock or China, Hong Kong, or any other stocks around the world, there are various brokers out there, and when you choose these international brokers, definitely the brokerage and commission fees are a lot higher. So you have to be even more careful to choose the right broker that suits your needs. So if you choose a broker that has a too high brokerage fee, or brokerage that have a fee structure that does not suit your needs, it will essentially over time eat up a large portion of your profits and even your capital. So it could have been an winning or profitable trade or investment, but after you minus off the commission, the different type of service fees, the management fees, you might end up suffering a loss instead. Let's say you have a capital of 1,000 ringgit, so that is considered rather small. So imagine you have to pay up to 20-30 ringgit as the commission fee alone. That is really 2 to 3% of your entire portfolio, which is a huge amount as compared to how much you have initially put in. Which is why I don't recommend people with small trading accounts to trade too frequently or diversify their portfolio too much and buy up to 10-15 stocks. Because when you have a small capital, you should be more focused and only choose up to 2 to 3 stocks within your portfolio. So I will make a future video on my personal take on which are the best brokers to buy stocks in Malaysia, stocks in US, stocks in Hong Kong, China, or Taiwan, and any other country out there. So the second mistake to avoid is thinking in terms of the monetary value or the dollar amount purely, and not based on percentages. So let's say you start trading with 100 ringgit and you make a profit of 10 ringgit. If you look at the dollar amount itself, yes, 10 ringgit is not a lot. In fact, it's considered very little in today's high inflation economy. So then you will wonder to yourself, after going through so much time and effort to learn, to research into the stock, learn about fundamental technical analysis, charting patterns, and you only make 10 ringgit, is it really worth it? Might as well I take the money and go and spend it or do something else with it. But here's the thing, if you ignore the dollar amount, the monetary value itself, if you just look at the percentages itself, 10 ringgit out of 100 ringgit is essentially a 10% return, which is pretty decent for someone that's just starting out or for a beginner. So don't focus purely on the dollar amount, but rather put things into perspective, such as looking at percentages or even looking at risk to reward. Let's say you only risked 5 ringgit to profit that 10 ringgit in that trade. Essentially, it's a risk to reward ratio of 1 to 2. So this means that it's a good thing. So because if you essentially build up the right skill and the right mindset to consistently earn a 10% rate of return over time, as your trading account grows, it is not going to forever stay as 100 ringgit. You're going to definitely put in more money along the way. You're going to grow your income, you're going to have a larger portfolio. Let's say the day it goes that your portfolio goes up to 100k. 10% of 100,000 is essentially already 10,000 ringgit, which will then be a lot more substantial. It's a more substantial amount compared to when you have a small trading account. So the third mistake that you should avoid is not adding funds regularly or having unrealistic goals. So I know many beginners make the mistake of wanting to turn their, let's say, 100 ringgit, 500 ringgit portfolio into 10,000 or even 6-figure portfolios within the span of few years, which essentially I can tell you that is just ridiculous and close to impossible. So if you hope that with such a small account and you want to be able to quit your job in 10 years time and be able to go for a holiday, relax on the beach and not having to work another day again, I would think that the chances are so slim that it's might as well better off that you go and buy a lottery ticket. I think the chances of it striking the jackpot is higher. So which is why if you have to look at it realistically, you have to add funds regularly and be consistent. So let me tell you why it's so important. So mathematically, let me give you an example. So let's say you have 1,000 ringgit account now, and let's say you are so good at investing or trading and you can get a 20% rate of return. So after 20 years of 20% annual return, your portfolio will have been worth around 38,000. On the other hand, let's say what if this time around you consistently add money into your account. So we start with the same example. You start off with 1,000 ringgit, you have 20% rate of return annually, but you add in 1,000 ringgit every single year. So that is essentially extremely easy to achieve. It's essentially only 80 ringgit a month. Similarly, after 20 years, guess how much your portfolio will be worth instead? It's actually worth 262,000 as compared to a mere amount of 38,000. So that vast difference of amount of money essentially comes from just adding 1,000 ringgit every year. So in order to be able to grow your portfolio and get a huge portfolio at the end of the day, you have to consistently add funds, be it a monthly basis or a yearly basis. The fourth mistake that beginners should avoid is not treating it seriously from the start. So most people when they start, let's say they put in 100 ringgit into an account, they'll think that it's okay, it's just 100 ringgit, let me do whatever I want, it's okay even if I lose it, it's fine. But guess what, if you incorporate this same mindset into a 100,000 account that you have eventually down the road, you implement the same bad habits, the same mentality and thought process, it's going to be a disaster down the road. Yes, I get it that 100 ringgit or even 1,000 ringgit might be a small amount of money to someone, but if you don't start off with the right mindset and build off on a strong foundation, it will carry over and cause you a huge loss eventually in the future. So you have to, right from the get-go, spend time learning and improving your investing skills and your knowledge on how to trade or invest, so that over time, as your account grows larger, your skills and knowledge grows along the way as well. That way, you will consistently be able to generate much more profits down the road. So I will continue to create more videos on tips and skills on how to better invest or how to grow your investment knowledge in the future. So the fifth and final mistake that you should avoid is not learning from your mistakes. So once again, it's a trap that people tend to fall into when they have a small trading account, because they will think that it's 100 ringgit, it's only 500 ringgit, so it's alright, I don't have to pay attention to it. Even if I lose money, it's fine, I will just try again. But like I said earlier, if you have these bad mindsets and bad habits, guess what? When you trade a larger account in the future, these things won't magically go away or change just because you have a 100,000 account or 1 million ringgit account. So it will all be carried over, and that's when you will really feel the effect of these bad habits and really suffer. So don't treat investments or trading like a game. Instead, treat it like a business that you are trying to grow and trying to build. Spend time on it, reflect on your mistakes, improve, rectify the problems, change whatever habits that you think is not right going forward. Eventually, all these investments will grow for you. The money will help you to earn and generate more money if you have the right strategies and mindset. So all this will allow you to be on the right track to financial freedom. So with that being said, we have come to the end of the video. So thank you for watching, and please leave a like and subscribe to our channel for more videos like this. Do leave a comment down below for any upcoming topics that you wish for me to talk about. Thank you, and see you all in the next video. Bye bye.